What's up, everybody? Thanks for clicking on the video. I'm going to show you a trade I took today and then two investments that I bought this week that I added to my long term. They're small positions, but I think they're both well-placed companies, and we'll see what they do in the long term. Now I'm going to show you the charts.
I'm gonna try to make this as quick as possible. So with Zoom, I'm making a swing shares trade. So I bought shares to swing, I bought shares to hold for the long term, and I bought a call option to the upside. A call is hoping that it goes up. You're betting that it goes up. So I'm gonna explain why right now. So these are the weekly candles. As you can see, well, when I see something going down, strength rising, that's the bullish divergence or whatever you want to call it. I don't know. But the strength is rising as the stock is going down, so that's a great sign. It's been in this downward channel since 2022. Also, like everyone knows, it's been completely dying since 2021. But that is not what I'm worried about. I'm worried about this channel. So right here, so these little dots are ideas. I'll talk about them in a second. Just they're what other people posted. So as you can see, we've hit and reversed, hit and reversed, hit and reversed. That's my dog. Hit and reversed, hit and reversed. But now we've hit here, but now we found support really, really close to under it. You know what I mean? It isn't a far drop, and we've been bouncing off this weekly support line for weeks now, over a month. And we're about to get in an hour and a half our first weekly candle that has fully opened and closed outside of this channel. You might be able to test that, but or call this a close, but or an open, sorry. But I mean that's up to you. But this is an open and close outside of here, and the strong wick under it. I think it has a good chance to bounce. So with both my shares and options, I'm going to be a little bit more strict. So options, as soon as it breaks this line, I'm cutting it. But my shares, my swing shares, I'm probably going to hold because I do think even if it does have a wick down, I think the wick will get, or I think the candle will get eaten up, and then I'll have another wick, and then I think we'll see an $80 Zoom here soon. Now my long-term shares, I'm holding for a long time, 5, 10 years, just because I don't really have any exposure in the communications sector, and I think this company is well placed, and I will show you why right now. All right, so the biggest thing is this right here. So they have $64 million in cash, or sorry, $64 million in debt. They have $7.5 billion in cash, which is unreal. That is a great ratio to have. Let's go to their earnings. Their earnings have been beating quarter up quarter up quarter. It's been doing great. Revenue has been kind of stagnant, which is kind of worrying. But the problem with this and the risk to this company in the long term is the competitive landscape. I don't think they really have a moat, like a reason that someone would choose Zoom over Teams, like Microsoft Teams. So the competitive landscape is kind of broad, which is kind of worrisome. That's why I made this, I think, 2% of my whole portfolio. So it's a small position, but I think they can capitalize from all the cash they have, and I think it's time for them to turn it around. So to summarize, I bought 2% of my whole portfolio is in long-term shares. I bought 10 shares to swing. This is my stop loss, so it'd be 60. I would get out at $67 roughly, and then I'd get out at the high end at 80 for my shares. And then for my call option, so Zoom $75 January 17th, 2025 call. So it is. So in order for me to make money, if I held to the end, it would have to be 75 plus whatever I paid for it, 292. So it would be $77.92. If it's above that, I make money. But I'm not going to wait that long. But with that one, I'm going to be a little bit more strict on my stop losses. So with the option, I might make it like as soon as it breaks this line, I'm cutting it. But yeah, so that's the play for Zoom. One long-term hold, one swing trade, and one options call. Next is Nestle, ticker symbol NSRGY. Make sure you do the Y because it translate everything to USD instead of the Swiss franc. I'm pretty sure they use. But basically, there's so much to talk about this company. Um, we will start with a project that I'm actually doing. We'll just start with what they own. This is a project I'm doing for school, and I'll show y'all. So these are their top companies: Nescafe, DiGiorno, the dog company Purina. I don't know how to spell it or pronounce it. Sorry. Pretty sure this is a makeup company, huge makeup company. Hot Pockets, Coffee Mate, I don't know any of these. Haagen-Dazs, you know that one. Nestle, uh, Toll House, Cheerios, Kit Kats. Uh, the Nespresso machines you see everywhere, that's them. But basically, I think what happened in 2000 with the dot-com bubble is happening right now. So the red line is S&P 500. The blue line is Nestle. This is 2000 roughly. This is like 96 to like 2005. You saw the dot-com bubble. This is the peak of it. This was like August of 2002, maybe. I think I can't remember, but this is a peak. Everyone wanted to get rich quick. Everyone was buying all the big tech companies, and then the stock market crashed, and then Nestle was continuously building, building, building. And then throughout this time, they were acquiring a lot of companies and diversifying. They were going into debt just like they are right now, which people are worrying about it. So they're like, why would we touch this value company that's gaining a 3% dividend a year and gaining 8% a year when I can just double my money in a internet stock? This is right now. So red is still S&P 500. The blue is Nestle. I think we're going into the same thing. Nestle's been diversifying. They've gone into like healthier snacks. I think they just cut. I think it's Yoplait or yogurt, whichever one they owned. They just cut it to switch into more growth-related sectors. So they said healthy snacks was that option. But it just looks like it's happening again. No one cares about the value plays yet, but I think the rotation has started, as you can see with. Let's see, as you can see with all the other like the main defensive plays. Let's go to Coke. You can see Coke is up a crazy amount. Let me get rid of these ideas. Coke is up a crazy amount. This is the bottom. So this is 1 year, 40% in a year. Coke doesn't do that, but I think people are already transitioning a just in case factor for the recession. And when a recession hits, these defensive names do great. Coke's already done that, and then we can look at Walmart. Where's Walmart? Walmart has caught a crazy bit as well. This is insane. From the bottom of 22 to right now, they're up over 100%, and then just in the past year, less than a year, they're up 65-ish%. Walmart is not a growth stock. Walmart is a good runner, a great company to own, but it is not a 65% a year um, stock. Right now, the price earnings for Walmart is 42, which is just, to put it in perspective, they're higher than Zoom, they're higher than Google. So people are either expecting a lot of growth out of this company, or they're rotating into the safer options, which I think is what they are doing. And right now, Nestle, their PE is roughly 20 and might be 19. So it's roughly 20. And I think they're a staple. I think they'll be around forever. I think this is a great buy. And like I said, I base a lot of my long-term holds off not being at the top of the run. So at the very bottom, it was roughly 32 or 31% drop, which is let me show you this. Now this is kind of a reach, but I'm just gonna throw it out there. So we'll go, well, I don't know, we'll just go right here, there to there. So we're kind of in this. These are the monthly time frames. But basically, you see kind of the same drop. It did go a little bit further, but I think we're in the same pattern. This is 2000. This is when the dot-com bubble was happening. I think we're in the same, 30 to 40% down turn. This is when they were acquiring a lot of good companies back then too. But yeah, that's my projection on Nestle. And the final thing I'm going to show y'all is their dividends. So this is, like I said, I'm doing this for a class. So don't take this too seriously because this is my first time doing it. But I do know this for sure. Since 2009, this has been their dividend payout per share. So $1.23, $1.37. So you have it going all the way up. You have the percentages. It increased by, so 11%, 51, almost 51%, 1%. You can see everything that's happening, how it's grown. So the average growth rate of their dividend since 2009, 15 years, they've increased their dividend by 7.64% annually, which is just, it is insane. It is a great dividend company to have. And yeah, I just believe in it. If you do the Gordon growth model, the forecast, so you do next year's expected dividend divided by the discount rate minus the growth rate. Um, yeah, so this is pretty much what we came up with. I hope, I hope this is something we can achieve 134 by next year. I don't know if it'll be that or not, but I'm willing to bet it is higher than it is now by next year. And also, if you don't trust my opinion, other people forecast it to about 109. Let's see the forecast. Yeah, so they see a bottom line of 92, average of 109, and the high end of 137, which is probably roughly kind of the high end of what I'm looking at, like a 130 or so. But yeah, so next year I expect to see a 110 Nestle for sure. I think people are going to start transitioning, and I think it is a good buy for the long term. But yeah, that sums up Nestle. So this is a long-term hold. I bought 4% of my total portfolio worth of Nestle right here at about 99 bucks. So this is not advice. Don't do it. It'll probably go to zero one day.
All right, everybody, this is the guy that was going crazy in the background. But yeah, that sums up the video. Uh, this is not financial advice. I'll probably lose everything. But yeah, so Zoom, January 25 call, $75. Zoom swing trade, 10 shares. A small portion of my long-term portfolio in Zoom, like 2%, very small. And then Nestle, I went in a little bit heavier. It's roughly 4 to 5% of my whole portfolio, just because I think that's a great company. I think they're diversifying well. I think they're going to be a cash flow monster, and I think they're gonna benefit from when this AI bubble pops. If it does, or I could be wrong, and the video 10x's from here again. But yeah, thank you for watching.